Good afternoon, all of you, and welcome to all the participants from my side. Today's Bazaar Pe Charcha session. Today is 13th July, and market is in full-blown bullish trend. There is no doubt that market is not in bullish trend, and it's not only market. All other sectors are also participating very well, even though Bank Nifty is little bit underperforming, but that's fine. It is also in bullish trend. So let's start discussing today's session more technical perspective or more in detail manner. So before discussion, disclaimer from our side that I'm going to read for you. Registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of return to investors. Investments in securities market are subject to market risk, and read all the related documents carefully before investing. Then there is a company address, registration number with SEBI or a compliance officer email ID, and contact number is given. Okay, so let's move to discuss this session. So structure is as usual. First, we will discuss various sectoral indices. Then we will take various customers query or clients query, participants query on stocks or any other thing related to market. So this is the current market condition as per O'Neill methodology of direct market direction. You all must be aware about we follow a unique approach of market direction methodology as per O'Neill methodology. And over there we categorize market in various segments like confirmed uptrend, rally attempt, correction, like that. We have segmented in 4. So according to O'Neill methodology, almost all sector, including benchmark index like Nifty 50 and Sensex, except only one thing, that is metal, which is an under pressure. All the indices are trending in confirmed uptrend. So there is a obviously strong bullish trend or strong bullish momentum. And if you see the return, I think this rally started on the last day of March. I think it was 30th or 31st March. And on that day, there was a first early indication that market is now going to move, and we are quietly taking aggressive approach from that. But if you see last 1 week return, so even though market is in bullish trend, but from the last 1 week, market is showing some side of like roller coaster ride. So, but that is not a worrisome point at current juncture, because market was bottomed out to around 16,900 or 17,000. And there was a continuous rally happened, almost 16,900 to this 18,000, 19,500. In between, and there was some consolidation happened, and then once again breakout happened around 18,700. Then this current level of 19,500. So almost after 700, 800 points of move, this current ongoing consolidation is a healthy sign of market. So need not to worry. So this last 1 week return in mostly indices is just a sign of consolidation, not more than that. So need not to worry. Otherwise, if you see the 1 month, 3 month, and 6 month return, so all the almost sectoral indices has performed well, and there are so many indices at current level is standing in uncharted trajectory. Like if I talk about Realty, so Nifty Realty is almost ready. Still, it is in not. But on closing basis, it is in uncharted trajectory. But on high basis, it is ready to move in uncharted trajectory. Bank Nifty is already in uncharted. Then Financial Nifty is uncharted. Pharma is ready to move in uncharted trajectory. Then this FMCG is already trending uncharted. Auto is already trending in uncharted. So all the major sectors which carries more weightage in Nifty 50, except only one, that is IT, is trending into uncharted trajectory. Now let's move to discuss further, technically on chart. So this is the Nifty 50 chart. Okay, so this is the Nifty 50 chart. And if you see this, obviously because market is in bullish, so there is no doubt that it is not trending any, means market is in bullish trend. So it is already trending into uncharted trajectory, and then trending above all key moving averages, trending above 50, along with golden crossover, along about 200 days exponential moving average. And I think 200 days exponential moving average is placed around over here. I have not plotted 21 days exponential moving average, but I think it is placed around this 19,300. So first sign of correction or extended correction, maybe 21 days exponential moving average. It is not breaching. Last time it tried to breach, but once again it has recovered immediately, and then it is entered into uncharted trajectory. So sign, no doubt there is any problem. There is no problem at all, in short. And one more thing, that current resistance, that is 19,500. So 19,500, 550. It is Nifty is struggling to cross this level from the last few trading session, but that is need not to worry. Maybe sooner or later it will once again cross and maybe ready to move toward 20,000 kind of level. So maybe 20,000 will be the psychological mark where Nifty will face strong kind of correction. But meanwhile, there is no problem at all. Only there is one concern, is that today it fallen sharply from high level in second half, and then volume action was quite attractive. So let's see tomorrow how it is going to behave, and afterward then we will have to take cues from that whether it will retest 50 DMA or have 21 DMA or 50 DMA. That is the matter of the next coming days, actually tomorrow onward. But meanwhile, there is no sign. It is trending above all key moving average. We are still expecting that once crossing and holding above, at least on closing basis, once Nifty will cross and hold on closing basis about 19,500. So maybe 20,000 around kind of levels will be expected in next coming couple of weeks, actually. So trend is positive. There is no problem at all. So I would just suggest to remain invested and just trial your stop loss according to market condition. Okay. Next is, apart from this, next sector is Bank Nifty. So if you see the detailed analysis of Bank Nifty now. So from the last 1 week approximately, I can say, or if I say a little bit broader view, so from the last almost 3 weeks, it is underperforming to Nifty. Even though it is positive, but it is underperforming. But once again, underperformance does not mean that it is trending negative. It is trending positive. But relative underperformance, Nifty is doing far better than Bank Nifty. But from the last 1 week, it is showing some kind of mild correction. So that is need not to worry, because here if I draw once again a trend line for you, this particular zone, so there was some healthy correction happened in this range, some bullish continuation pattern, and then that breakout, and now it is once again from the last 4 or 5 days showing some little bit kind of correction or profit booking or pause. I can say pause is a proper part in current segment of market. So it is taking some kind of pause. So need not to worry. Once again, one can keep tracking this range. So range is now the market base for this Nifty and Bank Nifty both has been shifted in upward direction. If I talk about Nifty 50, so Nifty 50 base is shifted, or base has formed for mid to long term, mid-term point of view. Base is this 18,600 to 18,800 kind of levels. If I talk about this Bank Nifty base, so this is the base. This particular area is a base. This particular area is a base from mid-term perspective. So it is trending above this upper band of this base. So there is no problem at all. Another thing is one can keep focusing on this trend line also. So it is just about trend line. So unless and until it will not breach this upward sloping trend line, there is no problem. So once again, this index is also doing good. Maybe after this pause, it will once again resume rally or trend in coming days, and maybe it would be ready to move level of 46,000, 46,500. And this 46,000, 46,500, we are saying from the last almost 2 months when it was in this consolidation range. At that time also, I have commented 2 or 3 times in this session only that once it will break out of this base, so maybe it would be ready to move toward 46,000 to 46,500. Even though it has already crossed or touched 46,000, 45,500, 600, but it has not. It is still to go another 1,000 point kind of level, 2,000 points kind of levels to touch that 46 to 46,500 level. So most probably, in my opinion, trend is bullish, some momentum is bullish, but and maybe after this pause, once again it will resume rally in coming days. So remain invested once again, just trailing stop loss along with this 50 DMA or either this upward sloping trend line. Okay, now next index is about this Nifty Auto. So Nifty Auto is already trending into uncharted trajectory, and it has already approached to crossed, or I can say 15,500. And long back we have recommended this level of 15,000 to 15,500 levels in Bazaar Charcha. I think 1 year, last year only we have recommended this level. Maybe sooner or later it will touch this 15,000, 15,500 levels. Now that earlier given last year target has achieved now. Now next target we would like to set in this auto index is 17,500 or maybe 18,000. So, or I can say broadly 17,000 to 18,000 kind of levels. So trend is bullish. Auto sectors are really doing good. There are a lot of stocks are participating well. Tata Motor is really doing good. Maruti has approached to 10,000. Then this other stocks like Tata Motor, Maruti, and another one is this. I am not able to recall that name. It is a frontline stock only. But all stocks are really doing good in this product. Ashok Leyland, yes, Ashok Leyland is really doing good. So after considering trend in all these things, now Ashok Leyland is already entered into uncharted trajectory. So after considering this trend in this index and component of this sector, I can say it is still in bullish trend. And maybe gradually, maybe obviously it will not move in linear manner, no doubt at all. But maybe sooner or later, or may suppose it may take pause, so that will give very good opportunity to take fresh position in particular sector. And sooner or later, once again, it will resume trend. And even though there is today also it is in uptrend also, so one can keep watching this. See, this is standing in this upward sloping parallel line, and this, if you see the degree of this trend is almost 45%. So it is moving in 45% degree. That is a very strong trend. And that is, it is, this particular index is bullish for so many years, not for a few months only. So whenever you will find dip in this particular sector or in this particular stocks belongs to this particular sector, so that would be good opportunity to buy in this sector also. The trend is bullish, no doubt. Short-term point of view, 2-3% here and there may be happen. I am not saying for that. Just for that, one can keep tracking 21 days exponential moving average either, or this upward sloping trend line, or 50 DMA that you can keep trialing your stop losses around that for short to mid-term trading perspective. But long-term sentiment and trend is quite bullish. Okay. Now Nifty Metal. So next is Nifty Metal. So Nifty Metal is remain quite underperforming. If you see, the lot of sectors are really doing good and trending in uncharted trajectory, but it is still not out of that wood that is earlier high of 6,900. So it is still trending around 6,400 kind of level. And if you see that this slope, I would say in this sector, this particular slope is also not looking that much aggressive, but its trend is positive, no doubt at all. There is no problem. So gradually it is showing momentum or gaining its momentum, and now it has approached to 6,400, 6,500 levels. Now, suppose if this stock will resume, it is already trending. Suppose this particular index is remain traded in this type of scenario, along with higher top, higher bottom formation, like it is trending and remain trended trading about 200 all key moving averages. It is already has approached or crossed 200-day moving average. So maybe next target would be this one, this particular zone, that is approximately 6,900 or 6,900 to 7,000 kind of zone. So that is previous all-time high. But suppose it will cross that level, that and remain trending over that. So maybe one can expect level of 8,500 kind of. Then we will turn our stance about this index. And then our last year, I think we have given this target of 8,500 in 2021. And afterward, correction has started in this space. And mainly main correction was happened, or major correction was happened because of this Adani problem. And because of that, there was a sharp fall happened. but gradually it is improving. Stocks like NMDC, stocks like Hindalco may really do well in coming days and coming weeks. So we are closely watching the stocks. Even Tata Steel are also doing good. Tata Steel is also doing good. So metal sectors maybe. Meanwhile, there is not strong momentum like auto or pharma or banking. But yes, gradually it is improving. For stop loss point of view, broader point of view, this stop loss of 200 days moving average is a critical level to us. That is black color on this chart. This flat 200 days moving average. So see, placement of this 200 days moving average is like flat. From the last 1 year, nothing was happened. I can say in this particular index, and that why this 200 days moving average turned into flat. And whenever, what is my observation or what is my study, what is my analysis about technical moving average? So 200 days moving average, whenever remain in flat zone, then obviously that always play as either a strong resistance or a strong support. So that is why I am saying this 200 DMA approximately placed around 5,900 to 6,000 kind of level will play as a, or will act as a strong support area for this metal index, which is almost 5% down from current level. Suppose it will breach, then maybe this segment will change from bullish to bearish. Sorry, placement of this index will change from bullish to bearish, but meanwhile there is no sign that it will breach this level. So just keep watching. Even though it is not bullish like other index, but it is in bullish. So but just keep watching 200 days moving. So now I am handing over this to my colleague Yatisha. He will discuss your sector.
Thank you, Pawan. So let me share my screen. So hopefully everyone can see my screen. So I'll just quickly start with Nifty Realty. So this is a weekly chart of Nifty Realty. And after that double bottom base, the index has been quite strong. And from the week, this is a weekly chart, and on also monthly chart, it has given a very good breakout. Right now, it is approaching its previous all-time previous high, that is around 550, 560 kind of level. So here the approach would be. So we might expect some profit booking might happening in this region, that is 550, 560 kind of level. So if that level breaks out, then it would go to a multi-run or bull run. That's a target of 800, 900. We might expect in the Nifty Realty. On the downside, the key short-term key support is placed around 50 DMA. You can see here there are a couple of times it has given took support around its 221 DMA, and there is a bounce back, good bounce back. So short-term trend one can keep close watch on 21 DMA for the quick support, that is around 520 kind of level. So if it breaks out 520 as well, so it might witness a sharp fall. It may witness a sharp fall, and it might head toward 490 kind of level towards its 50 DMA, as well as earlier this breakout level, that is 480 kind of level. So overall sentiment is positive. Nifty Realty, there is no problem with the price action and momentum. So one can keep close watch on the 20 points upside and 20 points downside is on the Nifty Realty. Next one is Nifty FMCG. So this sector is outperforming among all the sectors. This is in multi-run, bull run is going on in this FMCG space. So here the strategy would be buy on dip strategy. So one can easily follow 21 DMA for the downside key support level. Right now, if you observe from the last 1 week, it is witnessing some profit booking, and it is trading in the sideways range. So here at current juncture, the fresh position one can be avoided. Once it comes back towards 21 DMA, one can initiate a position. So if it fails to hold this 21 DMA, then again 50 DMA will be the next crucial level, that is 51,000 kind of level in Nifty FMCG. So overall sentiment is here positive. Only this from last 1 week it witnessing a profit booking, and 21 DMA is a key level to watch on the downside. Next one is Nifty Energy. So this sector is it's trending in the upward territory, trending in sideways range in the long-term correction is happening in the Nifty energy sector. So if you see from the last 3-4 months, especially from March, it's trading in the upward channel. So yesterday it has faced a strong resistance in this upper band of channel, and it witnessed a profit booking today as well. And yesterday it has formed a bearish candle. So right now it close above this upper channel, that is around 26,000 level, will be the next bull run for the Nifty energy. On the downside, this support that is placed around 24,500, this support level, as well as 50 DMA, which is red color, is placed around that level, that is 24,400, 500 kind of level. So it likely to trade in this between the range. So either side breakout or breakdown. So trend will be clear for in the next run for Nifty energy. So until then, one can avoid this sector right now, and better to wait for downside support that is around 50 DMA. And last sector from my side is Nifty Pharma. So Nifty Pharma is in trending in bull. There is a very good correction after that double bottom from base formation has been happened, and currently trading above its 61% retracement of entire correction, that is from last October 2021 to the 21 June. So almost 1 year correction, that 61% retracement is already happened, and it's trading in the very good positive trend. So here the trend will be continued to positive, and we are expecting 14,400 kind of level in the coming days. So on the downside, one can keep close watch on this trend line, which is low of swing low, tracking the lower lows of the swings. So that comes around 13,700 kind of level. So break below this level, so it might witness a profit booking. So until then, the overall trend is positive. One can see for further upside towards 14,000 and 14,500 kind of level in Nifty Pharma sector. So there is one last sector is pending, that is Nifty IT. So Pawan is going to discuss Nifty IT.
Can you share this chart of Nifty IT?
Yeah.
So see this Nifty IT in broader range, as we have commented in earlier Bazaar pe Charcha, that is in broader range of 26,000 to 31,000. And in between that, there is a level of 29,000. That is a level where below that it will remain traded into 26 to 29. Above that, 29 into 31,500. So last time it tried to cross, then once again it fallen, and then there was some consolidation happened around 200 days moving average. Once again, if you see this black color line on chart, that is 200 days. So flatten 200 days moving average, and now once again after breakout it is retesting. And now there was a numbers presented by TCS yesterday, and number is kind of showing some mixed kind of thing, and there today in market some positivity in intraday. So maybe but later in the late segment, late half hour of, I can say second half of market, or last 1 hour of market, there was some profit booking happened. So IT is like showing mixed picture, and maybe 29,000 once again is a critical level to watch. About 29,000, maybe range would be 29 to 31 or 31,500. Below 29, it would be 29 to 26,000. But yes, one thing is very clear, that the way it is behaving from the last 1 year and other things. So more or less, I'm not talking about 5%, 7% from here. But if I talk about larger point of view, larger picture point of view, so it is in form of, it is in the process of consolidation or base formation. So maybe if someone is looking to take position in this particular space from long-term perspective, so any dip from today onward may be the good buying opportunity, especially in mid-cap IT stocks or stocks which are really doing in kind of innovative or new technology is the quite attractive investment strategy. And if I talk about such type of companies, so such type of companies especially belongs to this mid cap IT stocks, and you can focus on that. Obviously, it does not mean that TCS Infosys will not do well. It will do, but comparative basis, maybe mid cap IT, even last year also mid cap, there was a huge performance happened from this IT mid cap IT stocks, and we still, in my opinion, that is going to be happen once again in near future also, once this IT index will turn positive. So in short, from it is in base formation. Maybe any dip would be the great opportunity to take position or from mid to long term perspective in this particular sector. So let's move toward query. So obviously, when someone is asking, can you discuss AI theme in IT? Definitely, we will try to discuss it next week, next Bazaar Pe Charcha. Just remind us in next Bazaar Pe Charcha, because today we are scheduled for something, so we don't want to disturb that. But definitely next week, next time we will.
PSU banks.
Sorry?
PSU banks.
Yes, PSU bank. So PSU banks index and PSU banking stocks are in sweet spot. Any dip in this particular stock can be utilized to take position. If I talk about PSU banking, so I would like to bifurcate whole PSU basket in two segments. One is large cap, another is one side is SBI, and another side is the rest of PSUs, including Bank of Baroda, Canara Bank, PNB, everything, IUB, Union Bank, Bank of India. So SBI is also looking good. So, but in my opinion, or as per my analysis, what I am expecting that maybe in coming quarters, not on coming days, no, coming quarters, maybe this small PSUs like Union Bank or IOB or Bank of India or PNB will comparatively do well in terms of percentage gain compared to State Bank of India. But it does not mean that State Bank of India will not gain. It will also, but comparative basis, I am expecting. So it is in secular bull trend. This PSU index, if I talk about levels on everything from short-term perspective, so levels are like today, there was a fall in this PSU index of almost 2%, only because of it has approached to earlier level of 4,500, 4,550. So this 4,550, or I can say 4,500 to 4,600. Let's take 100-point range. 4,500 to 4,600 is a critical level to watch. Another thing is that if you see the whole data chart of this PSU bank index on monthly chart, so now it is approaching to uncharted trajectory. So maybe after pause, this is one kind of pause only. And this pause can be utilized to take position from mid to long-term perspective in this particular stocks, as I have suggested earlier a few minutes back in this particular space. So maybe short-term point of view here and there of 4-5%. I'm not denying for that. Maybe this current correction, like today, it is corrected by almost more than 2%. Maybe it may fall another 2% or 1% or 3%. I'm not denying for that. But that would be utilized to create positions or investment position in this particular stock. PSU banks are looking quite attractive.
Next one is BOB under
PSU, na?
Yeah.
So as I have already commented in summarized manner, all PSU banks are looking good. So Bank of Baroda is also looking good, and it is really doing good from almost 1 year, or I can say 1.5 years. And now it is approaching to a previous all-time high. That previous all-time high is placed around 220 kind of level. This time high of 212. So maybe because of that, it is taking some pause and like that. So once again, same stance or same opinion in this also, that short-term point of view, 2-3% or 5% correction or here and there move may happen. I'm not denying for that. But overall trend and sentiments is quite positive. I would once again suggest to take position in this particular space and follow buy on dip strategy. Looking good from a larger perspective or mid to long term perspective. But if on someone is really looking for trading points only, so maybe it is in correction mode for 2-3% correction. Another 2% at least correction may happen in this particular. No. Yes.
Titagarh wagons.
TWL.
TW.
TWL bullish trend. Railway stocks. Not only this, other railway stocks are also really doing. 1 second. Sorry. Yes. So it is in bullish trend only. And this stock turned multi-bagger. I can say multi-bagger kind of stocks, because in 2021 when it has given breakout, it was around 75-80, and now it is more than 500. So it has turned multi-bagger stock. Or not only this, other stocks, other stocks are really doing good. Trend are positive. I would not suggest to take fresh position in this particular stock from mid to long term perspective. Just to take fresh position in this particular stock, I would suggest to wait for some bit dip actually. But if someone is holding, so just keep holding this particular stock with stop loss of 21 days exponential moving average or moving average. Because from the last almost I can say almost 4 months, I can say there was a fresh breakout happened in the month of March, first week of March, around 220 225, and after that it has never breached this 21 days moving average. Once upon a time in the month of May, it tried to breach, but once again second day it has crossed that level. It is holding above that. So that is why I am saying just trailing your stop loss or long positions with stop loss of 21 days exponential moving average. And for taking fresh position, I would suggest to wait. Maybe dip after dip would be the better strategy to take positions in this.
Next one is data patterns.
Data pattern. So data pattern today, there was a good move happened. Almost there was a once upon a time during the day it has touched almost 2250, and but afterward there was some profit booking happened and stock settled around 2100 kind of level. Otherwise, overall trend sentiment and everything is positive. It is already trending into uncharted trajectory. So same thing I would like to suggest, but in this particular stock, this stop loss is quite deeper. In this, like earlier, I have suggested this 50-day moving average. In this, 21 days exponential moving average in Titagarh. In this, I would suggest 50-day moving average. So 50-day moving average is quite deep in this. So which is currently flashed around 1670. But such there is no need to worry because trend is positive. And if someone is really bought at lower level, so one can book partial profit also. I'm not saying. Otherwise, trend is quite positive. Remain invested in this stock also.
Next one is IEX.
IEX. IEX is an underperforming stock, not doing good. Last month there was some negative news, and afterward there was some downfall, and now it is trending at very downward trajectory, and a very critical level of 120. 120 is a support area, so maybe some bounce back kind of trend may happen in this particular stock, but not looking quite attractive. Structure is quite weak now, so I would not suggest to explore this stock for buying purpose. I would suggest to avoid this stock for buying purpose. Maybe once it will breach 120 decisively, so maybe it will turn into 2 digits only, but obviously it will take time. Meanwhile, on the basis of, I'm commenting this on the basis of current trend or current data available in front of me. So at least to me, at least it is not looking attractive. So I would suggest to avoid. That would be the better idea, correct? Because there are a lot of stocks are really, lot of sectors are really doing good. So I would suggest to either catching this falling knife, I would suggest to focus on such type of stocks which are really doing good or showing very good performance in current markets. Because this is a bullish kind of market, so you should always remain on bullish side of market, not bearish side of market. This particular stock is in bearish side of market.
Next one is TCS.
TCS disclaimer is today only we have added in TraderSmith portfolio. After our numbers, we are expecting at least 5%, 6% kind of move in upside. So that is why we have added. So either you focus or follow us and follow our stop loss and target or entry exit strategy, or you can focus the short-term strategy, short-term stop losses 3230 kind of levels, and major stop loss is flashed around 3160. So, but from short-term perspective, it is looking quite attractive, but mid to long-term perspective, it is in sideways. only. But once again, as I have commented when I was discussing about IT, that maybe gradually it is turning into positive trend, or it is in process of long-term bullish base formation. Next is hello.
So next one is Root Mobile.
Root Mobile.
So
Root
stock
Mobile.
is,
I'm taking Root. Tisha, you please
okay.
take this one.
Okay.
So Root Mobile, obviously, it is in bullish trend only. Now the momentum are improving gradually on week basis and month on month basis. So I would suggest entry point was around, ideal entry point was around 1400. Now it stock is around 1650. So maybe I'm expecting good performance from this stock. Maybe from mid to long term perspective, this particular stock will really do well. And short term perspective also, this level of 1600, 1650 is a critical level. Today it tried to cross that 1650, but failed to close above that. But that is not to worry. Momentum and trends are positive. Maybe sustainable trending above 1650 will show more positive return in coming days. So from short term, mid term, long term perspective, this particular stock is really looking quite good.
Also, MarketSmith India has been added on 27th June. So one can follow MarketSmith India for
yes, for target or a remove entry exit
yes.
point of view. Yes. Please take Yati stock.
Okay. Next one is Canara Bank. So this also it has last week it has given a tried to give a breakout, and today we have seen many PSU banks have been witnessed a profit booking. So better not to worry. Better one can wait for the first sign will be this breakout level. So it's ideally supposed to hold above this level. Also, MarketSmith India has been added this product in our portfolio stock. So one can track MarketSmith India for if you are holding the stock. So first level of sign will be the breakout above this level. So one can next level will be 50 DMA is a crucial level. So closes below that, one can look for exit from this particular PSC stock. Next one is Tejas Network. So Tejas Network today, after it breakout from cup with handle pattern, it is trading in a very good trading in a sideways range, and today it has given a very good bullish candle from last 2-3 days. So also I think there is a positive news on the defensive sector in today's news, as the Prime Minister is going to France and making a deal for the further defense projects. So that could be the reason for all the defense stocks. So in today's session, it has given a it has its power to pivot flag. So right now its entry at current juncture, it will be the very crucial, because the risk reward ratio will not be suit. So one can wait for further downside once it comes back to consolidation. So one can initiate a position, but those who are already holding from the lower level, one can trail the stop loss with 50 DMA. So once it closes below 50 DMA, one can exit from this particular stock. Next one is Kelton Tech. So I don't track this stock, Kelton Tech.
It's like HPCL, I use here. This
HPCL and it's okay. In Petro. So it has given a very good breakout over here in the last June. So after that, it is continuously making higher lows price formation, and it is almost reached its resistance level zone of 305 to 330 kind of level. So here there will be a huge resistance for Hindustan Petro. So that we are seeing in this particular week's candle. So from last 3-4 days making a small very bearish candles. So better to wait for 21 DMA. So if it doesn't wait or hold that 21 DMA, so it might witness a further profit booking. So those are already bought much earlier. One can trail the stop loss with 21 DMA or 50 DMA. Then if suppose there is a bullish formation in this particular support level, one can initiate a buy on dip strategy for Hindustan Petroleum. And next one is Bharat Petrol, BPCL, right? IOCL. Ticker is Indian Oil, right?
IOC, Indian Oil.
IOC. So Indian Oil, after the cup with the handle breakout, it is touched its almost power to pivot break level. So entry level at this particular point is one can avoid it. So better to wait for further weakness below its 50 DMA or 21 DMA. So one can initiate a buy on dip strategy, but at current juncture one can be avoided. So this is regarding IOL. Next one is Federal Bank.
So there is a general observation for this all three oil marketing companies like IOC, SPCL and BPCL. So now it is in the last few weeks it did really well. So taking fresh position is another thing at current level. So we would suggest to wait and watch, wait and watch, maybe some consolidation or maybe fresh breakout only after we would suggest to buy. So wait and watch and keep tracking stock. Otherwise, mid to long term trend is positive, no doubt at all. But short term, maybe it will remain consolidation or some kind of choppy trading sessions in coming days. Yes, please.
Next one is Federal Bank. So, okay, so it is clearly, I think it's facing a strong resistance at this juncture. So it's trading in a consolidation range, and I think this is a reason for earnings, but this is, I don't know what today happened. So today there was a huge profit booking. I guess EPS is due today, so I don't. I think earnings has come already, or I have missed that earnings. So on the downside support, this is a consolidation range support that is around 121 kind of level. So break out this level, break below this level, so they will witness a profit booking at current juncture. So one can keep a close watch above 140 kind of level on the fresh breakout on the upside. So at current juncture, one can be avoided particular stock. Next one is ICICI Bank. So ICICI Bank has been trading very in the consolidations range. So it's making a very tight pattern from last 2-3 weeks, and it's facing a strong hurdle around this 950-960 kind of level. So one can look for a fresh breakout above 960 kind of level. One can initiate a position with the tighter stop loss with 50 DMA as well as this swing low. So this particular stock, one can keep it in a watch list, and fresh position can be taken at this particular breakout above 960 kind of level. Next one is Railtel. So Railtel is good. Today, I think it has given a, okay. Yesterday, it has given a very good breakout from cup with handle formation, and today there was a slight profit booking. That is fair enough. Like this is a range, a 150 kind of level. So once it breaks out above that level, so it might move to head towards 160 and 165 kind of level in the coming days. So one can keep in under the close watch list. If it comes back towards 130, 136, 135 kind of level with a very good buy point for Railtel. With tighter stop loss towards its upward sloping trend line that is comes around this level. So one can keep tight stop loss with this kind of stop loss, and one can ride this stock in the further upside towards 160, 165 kind of level in the coming days.
Okay, I'm taking Hindustan Zinc.
Hindustan Zinc.
So
Okay.
Hindustan Zinc from metal space is really doing good actually, and this level of 340, 350 is a critical level. Even though I'm expecting it will cross and hold above that, maybe it will enter into fresh bullish trend. Looking quite attractive at current juncture. If someone is able to manage the stop loss of like 200 below 290, so almost 10% from current level or more than 10%. So it is a good stock to buy. At least to me, looking quite attractive. But maybe momentum will once again accelerate if once it will cross and hold above 350 level. Otherwise, trend sentiment and everything positive. Last week there was a big bullish candle formation along with gap up opening. About 200 days exponential moving average. Another is this flat base moving 200 moving average. The another is this conjunction of all key moving averages of 200, 150, and about that it has given gap up breakout. So after considering all these technical signs, it is looking quite attractive. Only now trend will change once it will breach below 290 kind of. Otherwise, trend will remain positive. Maybe short-term point of view, 2-3% here and there may happen. I'm not denying for that, but it is looking attractive. Maybe any dip around 200 DMA would be the good opportunity to buy to minimize your stop loss as well. Now Maruti, I'm taking
Maruti.
Yes. So Maruti, now we are planning to wrap up this session by 5:30, 5:35. So let's move to rapid fire kind of sessions. So we will try to cover maximum number of queries because there are so many number of stocks. So just you, Tejas, start saying that the stock, and I will start commenting immediately.
Okay.
So Maruti trend is bullish, facing some resistance around 10,000, but that is no need not to worry. Long-term trend is quite positive. Any dip can be utilized to take position from mid to long-term perspective. Short-term perspective, today only it has breached this 21 days exponentially moving average, maybe below 21 days exponential moving average. Maybe it would be fall another 2-3%, 4%. I am not denying, but any dip can be utilized to buy. Next one.
Next one is asset management companies, UTI, NAM India, HDFC, AMC.
Okay. UTI, AMC, it is already bottom formed out in this particular stock, and now it has already given about to give breakout on weekly chart, downward sloping trend line breakout on weekly chart. It has already given. So maybe trend has changed in this particular last week only. There was a bullish candlestick formation, and afterward there was a breakout. So maybe I would suggest remain invested, and one can utilize buy on dip strategy in this particular stock to buy from mid to long term perspective. Stock is looking quite positive from all perspective. Maybe some consolidation may happen in coming days, but that would be the good opportunity to buy in this particular stock. Next one is NAM India.
NAM India.
NAM India is already trending in bullish trend, uncharted trajectory. So this NAM India is outperforming to sorry. I'm looking another stock. Yes,
it's
now
trending in bull trend.
Sorry. So NAM India is also turned out it is similar pattern formation like UTI, AMC. I think last week there was a bullish candlestick formation, and now their whole scenario has changed. It has already given breakout of a downward sloping trend line on weekly chart, monthly chart. So once again, this there is a many dip can be utilized to buy position from mid to long term perspective. Looking quite attractive this particular stock.
Next one is HDFC, AMC.
HDFC, AMC. HDFC is also same pattern, same thing. But yes, from a technical point of view, short-term perspective or mid-term perspective, it has already given breakout, but long-term perspective, it is yet to give breakout. But a structure, after considering structure, double bottom formation on weekly chart and other things, maybe this is also a good stock to buy from mid to long-term perspective. Short-term point of view, if I talk about it, it has already given breakout after consolidation in a started trading session only. Last week also given, then there was consolidation and there was a fresh breakout in started trading session. So maybe this particular stock will do good in coming days, coming weeks, and coming months as well. I would say out is also there on in methodology.
Next one is Mtar Tech. Mtar
Tech. So Mtar Tech trend is bullish. Today it has gained almost 10%. Sorry, in this week. Not today. This week. And yesterday only it has given fresh breakout around level of 2000. And today it has 2100. So it is a good stock. Maybe after 1 month of or 1.5 month of consolidation, it has given breakout around 2000. So maybe it is ready to move further in coming days also.
Next one is AU Bank.
AU Bank. AU Bank trend is positive. It is already trending into uncharted trajectory. And last month, not last month, but in the month of May, actually, it has entered into uncharted trajectory after long consolidation. So maybe paradigm has been changed in this particular stock. So this stock, maybe if someone is really patiently someone will really patiently hold this particular stock. So maybe this stock will turn into 4-digit kind of stocks, but it will take time, obviously. Short-term point of view, 2-3% here and there move may happen from short-term perspective. Level of 730 is a critical level to watch. Suppose it will breach the level of 730. So maybe some more correction will happen in this particular stock. I'm not denying for that. But from long-term perspective, unless and until this particular stock is holding above kind of 700 level, or I can say 690 to 700 level, there is no problem at all. And suppose this stock will approach toward that level, and afterward, once again, it will give breakout, any trend line breakout on daily or weekly chart, or any moving average breakout, or any other momentum breakout. So maybe that would be the right time to buy this particular stock.
Next one is Titan.
Titan bullish trend. But from the last 2-3 days, it is showing some kind of profit booking. So it is anyway, it is the outperforming stock from longer term perspective. So any dip can be utilized to buy this particular stock. And one more line I would like to add from my side. All this this luxury, not luxury, but related to personal consumption or discretionary consumption is really do well in coming quarters and coming years also. Because now economy is growing, people are getting more disposable money in their hands, so they are going to spend more and more money in products behind the products like Titan, or products like fashion or personal consumption. So that is I am expecting this stock has really did well in last 10 years, and once again I'm expecting that this stock further will do well in next 10 years also. But once again, now it is a matured, it has already entered into matured phase of market. So now from a longer term perspective, one can expect like normal kind of return, obviously. But yes, any dip can be utilized to buy this particular stock also.
Next one is Info-Edge.
Naukri.
Yeah.
So Naukri, when I was discussing about IT and everything, so if economy boom and everything was coming, so this Naukri will also do well. There are a lot of other segments belongs to this Naukri. So that is also do good. Another thing is that it has already given trend line breakout on weekly chart, downward sloping trend line breakout on weekly chart in the 2 month back only around the level of 3900. And then it is consistently forming higher top higher bottom formation. Today also the stock has gained almost 4% kind of level. And the way it has pattern formation and everything has formed, maybe double bottom formation on weekly chart, and there are a lot of other technical placement. Maybe this stock will really do good in coming months. Short-term perspective is also looking bullish. There was a fresh breakout happened into that trading session. So short-term perspective, someone is looking to buy, so just keep watching, keep trailing this particular stock with stop loss of 4280, 4280. That is quite deep from current level because today only stock has gained almost 4%. And another thing is this, the pivot breakout is also happened on O'Neill methodology. Even though EPS strength and everything is poor fundamentally, but technically it is looking quite attractive.
Next one is GPPL.
So GPPL disclaimer is that we are already owning in TraderSmith portfolio. We have added last week and on the verge of breakout, but afterward it has entered into sideways. So trend is positive, no doubt at all. In my opinion, it has already given breakout on long-term chart around 116, 117 kind of level, and it is holding above that level. So short-term point of view, our TraderSmith trading point of view, because we follow on an average 3 to 4% stop loss, anything can be happen because that is the normal breather space of any particular stock. But yes, from mid to long-term perspectives, this particular stock is looking quite good to me. And levels point of view, unless and until this particular stock is holding above 115, 116, there is no problem at
all. Next one is Astral.
Astral.
Yeah.
Astral.
It's
is positive after long consolidation of 1.5 years. It has given fresh breakout in the month of May, and then on the closing basis, and then a very good performance happened. But in this month, it is showing some kind of profit booking. So maybe this profit booking is giving good opportunity. Today only it took support around 50-day moving average and now some positivity. So if some swing trader kind of people is looking to take positions, so one can take positions with the stop loss of 1750, 1770 kind of level of stop loss. Otherwise, trend is quite positive from long-term perspective.
Next one is Airtel, Bharati Airtel.
Bharati Airtel trend is positive. It has already entered into uncharted trajectory. It is already forming higher top, higher bottom formation. So if someone is really want to hold this particular stock, one can hold. If someone is really want to buy stock, so I think one can take positions also around this 850, 860 kind of levels, and just keep watching, just keep trailing stop loss with the stop loss of 810 or 815 kind of levels. So trend is positive, but it is a slow moving stock. Just keep watching or just keep in mind this particular thing, that it is a slow moving counter compared to others actually.
Next one is Pradeep, Phosphates.
Paradip Phosphate already entered into uncharted trajectory on closing basis. Now it is on the verge of fresh breakout, I can say, on the high basis. So maybe trend is positive, trending above all key moving averages. Maybe there is a one resistance area that is 67, 68. Maybe in my opinion, suppose it will cross and hold 67, 68. So maybe it will enter into fresh bullish trend. And sooner or later, after some consolidation or thing, maybe it will once again enter into, no doubt at all. So looking quite attractive to me, any dip can be utilized to buy this particular stock.
Next one is Triveni Turbine. Triveni Turbine.
Triveni Turbine bullish, trending into uncharted trajectory this month, but it is showing some profit booking. Remain invested. Swing it. Kind of people can explore this particular stock and buy. One can buy with stop loss of 384, 383 kind of level. Otherwise, trend is positive from long-term perspective. Mid-term perspective, I would not suggest to buy or take positions, long positions. Just wait for dip, then only one can buy. But for short-term trading perspective, if someone is really looking for 5-6% kind of gain, so maybe 384, 85 is a stop loss level.
Okay, let's take last 5 queries. First one is JSW Steel.
JSW Steel. So when I was commenting about this metal stock, so metal stock is gradually gaining its momentum, and stocks like Hindalco, stocks like say Hindustan, Zinc, or NMDC maybe really do well. This particular stock is already entered into uncharted trajectory. This is one of the outperforming stock, this particular space. So maybe last month only it has given fresh breakout and then showing some positivity. In this month only up to date, it has gained almost 2%. So maybe after long consolidation of almost I can say 2 years of consolidation, last month there was a breakout. So maybe once again it is ready to move further from here. subject to good move in this particular stock, or subject to market will remain trending in bullish trend. So looking now, metal stock is gradually showing some positive strength, including this stock as well.
Next one is Delta Corp.
Delta, clear cut avoid from our side before seeing anything.
Okay. Next one is GSFC and Apple.
GSFC bullish trend. It is ready to move further. There is some resistance around 170, 175. It is close to that. Maybe sustainable trending above 175. Maybe once again it will enter into fresh bullish trend. So it is positive. Short-term perspective, if someone is really looking to buy this stock, one can keep stop loss of 155 at current juncture. But maybe stop loss will also trigger because of this consolidation and pattern, everything. But obviously, from long-term perspective, this stock is to follow buy on dip strategy.
Next one is Apple India.
So FL India, after bottom formation, now it has the last week stock has claimed 200 days moving average, and now it is in formation of this bullish flag continuation pattern. Even though it has not given breakout, but it is in the process of formation of bullish pattern continuation breakout, and it is still holding about 200 days moving average or around 200 days moving average. So maybe gradually it will turn, the momentum will change. And maybe after this flag breakout, maybe this stock will give very good buying opportunity from short to mid-term perspective. So just keep watching this stock. Current placement is quite attractive in this FL Limited.
One last question. Amit is holding PFC and his return of 100%. So should he need to book profit or wait for long term?
See, all these NBFC or power finance companies are really doing good and may do good well also from next 3 to 4 quarter or 5 quarter or 6 quarter. I'm not denying for that, but you have already sitting on 100% profit. So in my opinion, at least to be remain on safer side, at least you should book 50% profit. But obviously we are not recommending to book 50% profit. We are just suggesting that you can do like this is the best practice in our opinion, but the ultimate call should be taken by you only. Otherwise, maybe after some pause or like that, maybe once again, at least from sector point of view or overall placement point of view, there is no problem at all for at least next 1 year.
Okay, so shall we wind up the session?
Yes, let's take one more query. So it would be 535, last one from large cap only. Yeah?
Large cap. NTPC.
SCL Tech. Sorry.
Okay, HCL Tech. Okay.
HCL Tech. And what are you are saying?
NTPC.
And let's take both. So HCL Tech belongs to IT space. IT is in sideways, and this stock is also a sideways. So maybe long-term perspective, it may remain bullish, but sideways, I'm not expecting such kind of handsome kind of return. So it's ultimately up to investors' point of view that what type of investor he or she is. So, but otherwise, in my opinion, it is in sideways only. Short-term perspective, 200 DMA is a key level to watch, which has already approached. Maybe below that, once again, correction will extend, but suppose it will take support around 200-day moving average, so maybe bounce back will happen. Okay, but meanwhile, overall sentiment is sideways only. And last one is NTPC. So NTPC, once again, stock is in bullish trend, and now it has approached to adjusted all-time high price. This month only it has approached to almost 200 level, and afterward there was some profit booking happened. So maybe it will take some pause, but suppose it will cross an old 200-day moving average, so once again it will enter into fresh bullish trend. Or anyway, power stocks are really doing good, so NTPC is one of that. So maybe after some pause, maybe it will once again turn bullish. So maybe buy on dip strategy would be quite good for mid to long term perspective. So it's almost 5:35, and we try to capture maximum number of queries in this session in rapidly manner. So thank you all of you for joining this session. Today's Bazaar Pe Charcha. Remain invested, traded, or following the market with us. Thank you. Thank you for joining.
Thank you. Thank you, everyone.